Welcome to the third episode of Technical Analysis, everybody. In this video, we are going to take a look at M's and W's and quickly go over them. So what do I mean by an M and what do I mean by a W? So an M means that we go up, we go down, right? Somewhere in between these lines over here as a price. We go up again, right? Not higher than this level over here. It can be as same as this level. And then we break these levels right there. So this is an M formation, right? And what that means is that it's not technically looking necessarily like this over here, right? But it can look sometimes like a ugly M, right? This is still an M. You know, the point of the matter is the way to recognize these kind of actions over here is that this is not an M, right? This is basically a breakout that ended up resulting with a fake out. And we can see those too, right? So this could be like a, you know, an M that's coming in over here, but this was a W at some point because it's a fake out. So usually the way that we use this is by timing our trades in a breakout. So for example, in this W formation over here, what you see is that the price goes down, goes up, goes down again, and breaks the initial level that it tested over there. And by the time it breaks that level, you usually see the price increase. So you use that level to enter a position. Same with a downtrend, right? So something like this. By the time we break below that initial M support that we had, and that is your entry. And sometimes we test that level and that builds up another M. So basically what you are seeing on the price action, there's always like M's and W's on top of the chart. And as technicians, we try to utilize them. Like, let's take a look at this example. And for the purpose of this video, what you can do is that click on the line chart to easily recognize the M's and W's. But if you use the candlestick chart, you can easily see the lowest point that we had over here, right? So let's take a look at this. So we go down. This is the lowest point. We go up to this level. We go down again, and we have the breakout. So what you can clearly see now is we are seeing something like this, right? So we went down. We went up. So let me draw it with this path tool over here. So we went down, we went up, we went down here, and then where did we have the breakout? Right there, right? This is your breakout level over there. So if you take a look at this over here, what you see is going down, up, down, breakout. So technically the level that signifies us an entry is going to be over there. So any kind of retest to this level after we, break it will give us a buying signal. And you cannot necessarily see that on the daily time scale, but maybe on the 240-minute time scale, you can see that W a lot clearer and maybe a retest over there. Let's take a look at the M's. So what you see over here is an M formation, right? So you usually like take a look at this and this looks like a smiley face, right? Because this is the high point. We went down, we went up, and we went up initially, right? So it's something like this. We went up, we went down, now we went up and breakout. And that breakout came in right over here. So since we break this level, any kind of like test of this level is you are selling the momentum for the downside because it's an M formation. Sometimes you can use it with the candlestick closes and it will give you a lot better look on top of the chart. So let's take a look. So as you can see right now, we went up, we went down, we went up, and breakout. And that breakout came in right over there. And since you can see this level now, this was the sell signal right there, right? Because the momentum is going down right now. And any kind of formation that you would ever see combines the M's and W's on top of the indicators or on top of the price chart or even the volume chart has the M's and W's, okay? So if you take a look at, for example, like a W on the RSI as we did on the first episode, we can clearly see those M's and W's. So let's take a look at this action over here. What do we see? Well, we went down, we went up, we went down, and a breakout. So technically, this was the breakout right there, right? And since the trend is sometimes going sideways, these M's and W's turn out to be a fake out. So you want to be, preferably in the longer time frames, you want to be seeing those M's and W's with their confirmation for the downside. So what do I mean by that? Well, what you will want to look for with an M and W is an uptrend or a downtrend in the longer time scale. If the market is going just sideways, then these M's and W's will most likely to be turned as a fake out. So like you can see over here, for example, right? So what did we have over here? Well, let's take a look. So if you take a look at like this one, up, down, up, breakout. So this breakout obviously failed, right? And the part of the reason because of that is the market is going just sideways and it's just ranging, right? It doesn't have an uptrend or a downtrend. So preferably if you buy the W's and M's on the price action, what you will be looking for is an uptrend or a downtrend. Okay, so those are some of the basic things that I will look for. So if you have like over here any kind of W or M, it cannot probably work out because we are just going sideways. Unless we break this trend, then you can buy the W for the upside. That's usually a great idea. But you can clearly see if the trend is an uptrend, we went down, we went up, we went down, and a breakout, and we never look back at these levels because that is basically an uptrend. We went down, we went up, we went down, breakout. It's the same thing over here, right? It's always the same thing. There's always M's and W's. Like there's another W like that over here. There's always this like up, down, up, M right there. So like you can clearly see the M's and W's coming in, right? This is another W. This is another good W. Like this is another M that's coming in. This is another M. There's always those M's and W's at the bottom of the value. Like up, down, up, breakout. That's another M, right? Let's take a look at this one. Up, down, breakout. Like something like this, right? Or you may want to say up, down, up, breakout. Another M. Let's take a look at this one. Up, down, breakout. You know, there's always a breakout. I mean, this is not the best W, but like this is a good W right there, if you ask me. So it's like really simple if you take a look. You're just trying to like locate the M's, right? This is another M. It may take some time for you to see what I'm seeing over here, but over time you would understand it. Like this is another W right there. This is not a W because like, for example, let's take a look at this. As you guys can see, like we went below this level. Technically, this is not a W, but some people like say that it's a W, but I don't like to say that it's a W with the closes. But once you enable the candlestick formations, what you see is that this was the lowest low point. So we went down, we went up, we went down, and breakout, right there. And those are some like core principles that you look for when it comes to entering and exit a trade. So this is the way to use it. I would always like use this M's and W's to enter a trade for a breakout trade. Okay, for a breakout trade. What that means is that if you are a momentum trader, this is the best tool to use if you ask me, and always wait for that retest usually. Do not chase by the price, but retest level, right? That's usually a great idea to do. So if you take a look at like a breakout like this that's coming in, usually you want to see a retest of that level. Sometimes it doesn't have the retest, but if you look into the shorter time frames, you usually see it. Because we are taking a look at it on the daily time scale on Bitcoin, usually we don't see the retest. But if you take a look at like, let's say over here, what do we see? Well, there's the up like this. So up, down, breakout. So this was another breakout right there. So what you can clearly see, like right over here, by the time we break out that level, like right over there, right? This was our ranges. So you may want to say we break this level or we break this level. What I like to use it as is to break above the close levels. And so it will be over here. So down, up, down, breakout. So we confirm the uptrend over here. And now we retested level twice. We failed that level, you know, basically liquidated everybody who bought that W. And now we literally just jump up higher. And what you clearly see is that by the time we break it, this was a support. We broke the support, liquidated people, went into a support again, and then off to the races. So that's how you basically determine the supports and resistances. By the time the W comes in, you buy the retest. But it's the same thing for like a sell signal, right? Like, for example, if you take a look at something like this, probably it will be a better example over here, right? So something like this. So what you see over here is we went up, we went down, we went up, and a breakout. And that breakout came in over here. So let's take a look at that. So this was the level. This was the another level right there. And these levels are the support levels. And by the time we break it right there on the 16th of May, around like 4 p.m., what we see is that we break down, we push and we tested that level once, we failed, and another M over there. So you see there's another M inside of the M, and that's usually how the trends work. So since we broke this level now, we didn't even retest that level, we are just going down. So this is your resistance now. If you waited for this level, this was your initial M. So we are just keep moving higher, lower, we went up, we went down, we went up, breakout again. So this was another level. And then the price started consolidating and we are just going sideways over here. That's another story. Since we are going sideways, the M's and W's do not necessarily work. But if we are in an uptrend or a downtrend, the M's and W's will work really, really greatly for the momentum traders. So that's all I gotta say for this video. I hope you guys enjoyed it. If you did, make sure to give it a thumbs up. Let me know down in the comment section. And if you have any questions, let me know down in the comment section as well. And I will see you on the next episode. Take it easy for now, everybody.